Let's try it now. Now can you guys hear me? Let me know. Christopher Inks here with Texas West Capital, checking in with y'all at a few minutes after 8 a, or after 11 a.m. Central Standard Time here on Tuesday, March 2nd, 2021, in beautiful Boerne, Texas, just north of San Antonio. We made a move this weekend, which caused a whole bunch of havoc Monday morning. They had to come out and redo the wiring for the internet here. But it's all good and working now and is supposed to get even better. So our quality of stream and everything else should get exponentially better here as the week progresses from what it was prior. So good to see y'all checking in here, man. We are excited to be here. We're excited to be moved out of the big city and kind of in this this nice area. If you've never been to San Antonio, I think you should. You know, you owe it yourself to visit the Alamo City there. And while you're there, take a short trip up to Boerne. Check it out, man. It is Boerne, but pronounced Boerne. Absolutely fantastic area here, guys. Beautiful. It's a little bit deeper into the hill country, so some great peace of mind rather than the big city stuff going on. So hey there, what's going on, Hank? I see you here. River Run is here. Nathan's here. Common Man is here. Says I can't believe he's here before the beginning. Me either. Knock on wood, man. Hey there, Crypto Mowgli, LXT, Tell You Rider is here as well. Let me see here. Common Man says the DXY is looking for that lower high. Yeah, you know, potentially, I'll be honest with you, the DXY right now, I'm not convinced either way at the moment. I'm still leaning toward that further downside, so we'll take a look at that today. But, man, I'll tell you what, the last few days of price action, that's got me iffy. That bottom may be in it, but it's still got to make some, you know, advances, you know, coming over here in the next few days to kind of really get that. So, yeah, we'll see. We'll definitely take a look at that. Yeah, man, new Boerne identity series here. Actually, we've got a few different places I'm looking to put the office here. So y'all might end up getting a view behind me instead of a paneled wall. Office wall. You might be getting a view of the outside through the windows or something. I've got a couple nice areas, maybe give you guys some better view to concentrate on other than my ugly face, and see that beautiful hill country out there. We'll see what goes on over the next week or so, guys. Let me see here. Who else is here? Data's here. Good to see you, Data, as always. Let me see here. Yeah, wrong Boerne there, Tell You Rider. Crypto Surin, is that correct? Good to see you. Budman is here. Denny is here. My sound is much better than before. It's hardwood floors throughout, so it echoes a little bit more. So that may be giving you. So hopefully that helps you guys out. We're loving that. Yeah, Common Man. I got what you meant. You meant to say the high or low. Yeah, instead of the lower high. I got you. Hey there, Mark. Good to see you checking in. The earliest you've made it. Well, I'm glad to see you here, man. I'm just getting in here as well. Spiral Architect, what's going on, man? 51 ETH is here. Aramis is here. Good to see you guys checking in. Hey, listen, for those of you who are new or who haven't made the plunge yet, join us at howtotradetowin.com. We'd love to have you there. We've got a ton of education. I know it says 30 hours of educational content, 30 plus hours. We've got well over 60 hours now. And growing every week. You know, you get your weekly, with Tier 3, you get the weekly live streams that we do. And we've started a little Elliott Wave series here last week, so we'll continue that for a few weeks as well. Plus, you'll get access to all the previous ones we've done. You know, 20 plus assets that we do on a daily basis. You know, we do the 1, 2, 3, 4, 5 crypto indexes, alt perp, DeFi perp, exchange perp, mid perp, and ship perp indexes there. Of course, you get the chart request. I'm still trying to catch up with those, man. We got so far behind with the power outage there, with that crazy weather that Texas had, winter weather we had here recently. So working on getting all caught up on that. Chart critiques, all that fun stuff, guys. Hot takes. Join us. We'd love to have you here. I'll tell you what, you know, forget what I do here, man. I'm honest, man. It's our members that really make it a place worth being. Seriously, it really is, guys. And I can't speak highly enough of our members. They are absolutely amazing. But I think one of the things is, I think they appreciate the way that we approach the markets here and the you know, the setups and the education and all that we do, because most of our members have been with us well over a year. Some of them have been with us for the three plus years that we've been in business. They're still with us. And that creates an amazing community of very helpful, kind people, man. I can't imagine a better place, a better trading community to be a part of. So don't take my word for it. Ask them. They'll tell you. But anyway, let me see here. Hey, what's going on, Briley? Good to see you, man. Thank you, sir. I appreciate you. Jonas, checking in. Good to see you, man. Long time for sure. Esteban, what's up, man? Yeah, man. 51 ETH, everything is great. Thank you, sir. Y'all like that paneling behind me, huh? All right, let's check out and see what's going on with Bitcoin here, guys. So, you know, here's the reality of it, guys. You've got a lot of, I mean, if you take everything off here, when you're looking at the market here, the reality is you've got chop. This is, yes, you've got lower lows here and lower highs, which, you know, again, is this bearish trend, right? Okay, that's fine and whatnot. But the reality of it is we've really been overlapping since kind of this area right here. So since basically the 22nd of February, you know, it's kind of this whole, let me see here. This whole area is just a bunch of overlap. And so what that means is it gives you a lot more possibilities. There's no, you know, it's easy when you're doing this. It's easy to say, oh, well, we're headed down, right? It's not so easy when you're getting this to kind of figure out what may be going on. And so a couple of things we're looking at here is that we've got this potential large wedge here, descending wedge. And then we've got this potential local descending wedge right here as well, which could lead to a couple of different counts. I know everybody's bullish. This was great price action coming up here off the lows. It looks very bullish. But the reality of it is we're still below. You've got to get above this swing high right here. You've got to get above this 55. Let me see if I can get this here. 52,107.83 here on Coinbase. You've got to get above that to really start to really have a good claim to feel bullish. As long as you remain below that, you're still in this bearish market structure. We've talked about this before, where you've got the lower highs and the lower lows. You're still in this. You're still making a lower high potentially here. If price, now this is not a lower high yet. This is only a lower high here from this point if price drops below here and makes a lower low, okay? Because if it doesn't drop below here and instead turns up here and goes up and makes a higher high, then that means that you've got, you know, you've broken this bearish trend and now you've got this bullish trend starting here. So that's why you can't say this is a lower high yet. You've got to wait till it drops down below your low over here. But once it does, again, that just kind of confirms more of this bearish price action. Now, like I said, everybody's very bullish about this move up. It was a good move up. But you also have to understand, guys, this was a long way down. So you're going to get a strong reaction. And that's, I think, where a lot of traders are going to get caught if this continues going. Here's the thing. Everybody's thinking higher up, right? Now, we've got some great traders on both sides of the thought process right now over in our Bitcoin channel. You know, and so it's great. We've got a lot of good information either way. But I think the best part about that is not everybody is saying, oh, we just need to go up. They're saying, listen, we want to watch, we want to see it go through certain levels, get through certain things first to kind of confirm that, you know, we're long off these lows here, but with the thought process that we might need to go ahead and take profits and kick in a short, you know, depending on what goes on with price action. So right now, you know, I mean, if we look at this, the 1 hour, you can switch this over here to the 4 hour, same pivots here. You see that we've got that price has dropped here below the pivot, below the 4 hour pivot. Now you can look right here, 4 hour Stochh RSI is dropping out of overbought. RSI is neutral, and it's been trending up here on the 4 hour since the 23rd of February. But of course, if we drop back over here, it's kind of the opposite idea here on the 1 hour. It's been declining since the 1st of March. And even though Stochh RSI is down here and oversold, RSI has further it could fall. And look at the volume spike on this drop here. Not only is there a large spike of volume coming up here, but it closed near the lows. So I would expect us to potentially have further downside here. A bit further anyway, you know, just because of that right there. But you can see the lead up. Look at this, guys. You could pay attention to this right here. How could you have looked at this and said, well, I think it's probably going down a bit? Because if you look right here, you see how the volume is real low here as price is kind of going sideways? And then you get this thrust up and it comes back. It closes a little bit lower than where it opened. You've got this large upper wick. And then you look down here and you'll see there's a spike of volume compared to where it was. That's a clue that it might be headed down. You look at the next one. Again, you've got still a small candle overall. But, you're getting a lower low off that small candle. Again, large volume here. So that's your setup. That's telling you it's probably, this becomes your higher confidence trade. At this point, it's more likely than not to head down. And sure enough, because you got all this heavy volume coming in. And you've got these, especially here, this smaller candle spread and smaller candle, because you've got people still trying to buy it. You see right here, this area, you got these lows here. So you got people still trying to buy it here, but not enough. And you've got supply coming in, and it's wearing out that demand there. Boom, there it goes and drops down with that. Now, does that mean it needs to get below these lows over here? No, it doesn't. It means it could, but I mean, if I'm counting this, I'm looking 1, 2, 3, 4, 5. So if it's me, I'm looking at this just being, even if I'm thinking it has to come down further here, below this swing low, to me, this is still A, and this is A, B, C, potentially working on a B here. And then we'd have 5 up for C. So I'm still kind of leaning towards some further upside if we're going to go down, before we get further downside on that. But again, it could just simply be 1, 1, 2, 3, 4, 5, A, B, C here working on that 1. So if we check this out then, this gives us a 38.2 kind of retracement at the moment. And let me see here. There we go. So it's got us about that 38.2 area. You notice, look at where we're bouncing, guys. Remember when I drew this trading range last week? And so we're bouncing exactly at the EQ of that trading range. Now, so further downside, I mean, I would think, maybe this 50% area. You can see that the 50% retracement of this advance aligns almost perfectly with the 23.6 retracement of this larger advance. It's right here at this higher volume node area. So to me, that would probably be a good target here. So like I said, A, B, and C may be getting down to that 46, 645 area. But the important thing to know is once it gets above this swing high here, this 49,750, that should be your clue that it's probably headed up. Now, where is it going if it's headed up? We've got a couple of things we're looking at. This large blue area here is the daily supply structure. And so the EQ of that right there is around that 50,900, 50,950 kind of area. That's the first target. This smaller one up here is this, it's going to be the 4-hour supply structure. So the EQ of that is around 51,700, 51,750, around that area. That's the secondary target. And if we're continuing up, I've been talking about it for a while now, this swing high up here at 55,043, that's kind of the target there. That gets you, I would probably look at this range here between the R4 or the R1 pivot here on the 4-hour at around 54, basically about 54,200 to that top there. That kind of range there would be my next target on that, if it's going to continue up there. But if it gets rejected, let's say in this area here, before we're getting above this swing high at 52,107, if we get rejected on there, let's say this is an A, a B, and it prints a short C here, the decline back below the pivot would be your first clue that, hey, we're heading lower there. Even if it gets up here to the R1 pivot, doesn't get above that swing high over there at the 55,000. If we're getting up here and we're pulling back below this pivot, that's your first clue that probably this is either a B or a 2, and it's going to come down further. Because right now, the count to me, it seems easiest as a 1, 2, 3, 4, and then 1, 2, 3, 4, 5 gives you this ending diagonal here. So we've got 5 down. That to me seems like the easiest count, the clearest count here. But there is the possibility that you can squeeze out a WXY here, because you've got this ABC looking thing, and then ABC looking thing, and then ABC looking thing. So just going off basic structure there is an argument for WXY. And so if this is a WXY, then 4 is done, and we're up on 5 right now. But again, in order to feel more confident about that, we need to get above this minimum, this swing high here at 52,107. And really above this one up here at 55,043. As long as we're still below that, there's still a strong chance that price could, that price is susceptible to falling lower, and heading down below that swing low there. Let me see here. What are you guys up to? Moving is like hitting yourself in the head with a hammer. It feels so good when you stop, man. You ain't kidding, man. We had a long weekend. Saw a big old, man, probably like a 30-pound skunk, man. That thing had to be about 30 pounds. That thing was huge. Running through the yard on Sunday about 9:30 p.m. when we drove up. I wasn't too happy about that one. Because if that thing sprays, man, it's going to, man, this house, this area here, this whole area is just not going to be all that great. Onyx King, thank you for saying so, buddy. Yeah, man, I'll tell you what, I love the country, man. I'm from it originally. I'm West Texas, so it's a beautiful thing. Cryptosuran, you're saying maybe an inverse head and shoulders in the making. Are you talking about here, right here? Yeah, possibly. I'm not a big fan normally of head and shoulders and inverse head and shoulders anyway, because the pattern's so easy to misinterpret. This is a really kind of a deep angle, but maybe, right? So maybe, let me see here. Maybe something like this, I think is what you're probably looking at, correct? Let's see here. And then so maybe, coming down here toward the 50 and then up. So if this is what you're going to want to see to kind of maybe confirm this is going to be as price finishes this right shoulder and heads up and then breaks out through the neckline, what you want to see is volume expanding. You want to see volume getting larger as it's doing this here. If your volume stays low or declines as it moves up here and breaks out, I would be really, really hesitant to call it an inverse head and shoulders. Yeah, again, if you see this reversal somewhere, either where we are or down here around the 50 or whatever, and you kind of see this moving up and the volume starts expanding with it, getting a larger volume as you build it up and then break out, especially when you break out of that neckline there. Yeah, then I would. And in a case like that, you got a pattern target here of about $6,500 above the point of breakout, based there on the height of the head and shoulders. And that would be your pattern target there, about $6,500. So it could potentially take, you look at, if it did it right here, let's see here. For me, this is 7 p.m. tonight, so that would be another 7.5 hours from now. If it came up, broke out of there around that time, your target is going to be the same as this large potential pattern target from this, maybe a large wedge that we talked about previously, which is all up around that same area. It's all up here at this high volume node, right around the 57,150 kind of area. So that's a possibility, sure. But again, my issues with it, my big issues with it is this right here. Usually when I'm looking for like an inverted head and shoulders, what I prefer to see is some, definite movement down here like this. And instead what we have here, with this right here, is we have something more along the lines of this. And so just the proximity of lows here makes me iffy about it when we're doing that. Because it looks like this inverted head and shoulders is more a reversal off of this decline. And if it is, it's taking up almost the entire decline, which again makes me questionable. For your head and shoulders or your inverted head and shoulders to work out the best, they come at the end of the movement. And yeah, you can say this is the end of this whole movement here, but locally it really does appear to be part of this decline. And so that just makes me iffy about it. But, you can definitely watch it. It's definitely a trend line to watch here, So if you get the breakout of this trend line, that's something to watch. Sure. And that's the neckline. So the best thing about patterns is it's not so much the pattern itself as that breakout point, where that support or resistance is. That's really the big thing that you want to kind of pay attention to on that. What's going on, Spooky? Good to see you checking in. Hank, thank you very much. Boerne is an absolute beautiful town. Really, guys, if you ever get a chance, visit San Antonio. And if you do, check out Boerne, man. It's a great little place. Let's see here. Let me kind of catch up with you guys here again. Excuse me. Dominicus, what's going on? Says, I was wondering if we have a Head and Shoulders on the 1 hour. Is that what you were looking at, the same one we were talking about? Or are you talking about this right here? I'm not sure which one you're talking about there, Dominicus. The inverted Head and Shoulders here, or this potential Head and Shoulders right here as this. This is potentially a Head and Shoulders here. So yeah, this one right here. Okay, yeah. So if it's this one, let me go ahead and just kind of take this off. It's out of the way there. So the neckline, we've got, what I like about this potentially being a Head and Shoulders here is that you've got a large candle spread and large volume expansion here coming through that decline. That's what I was talking about. You want to see if this is a large inverted Head and Shoulders, you're going to want to see that same idea, kind of this just inverted. So if this is it, then the pattern based on the height here is right there around about $2,200 below the point of breakdown. So that would take us, let's see, right here to around 46,300 or so. 46,300 or so with that. And so that gets you just, and that makes a lot of sense. It gets you right to this higher volume node here. It gets you right into this price action right here. And so part of the reason I talk to you guys this way and I show you all these different things is so that way, you eventually can start noticing, where these, if you're using the VPVR, where these higher volume nodes are and how they just kind of show you what's been going on over here in this side. The idea is to get you all eventually not even to look at all this and just be able to look left in the price action and go, okay, that looks like a good target there for price. But it takes time, it takes practice. So, we go through everything and always end up looking at that as, in the supply structures and demand structures, just as the where we're trying to head with when we're learning how to trade, how to look at the charts. So, yeah. Let me see here. 50%. Yeah, that's what I look at right there, Hanks, that 50% area. Again, that aligns pretty well here with the 23.6. It's just a little bit above that pattern target there. So we'll see how we do with that. Things get a little bit interesting, I think, if it continues to drop here below the 61.8, because it gets here below this swing low. At that point, I would look probably at the 70.5. That's this. It's hard to see on the chart here, but there is an opposite candle going on here. A couple of them right here. And so that, that gives you that 70.5. So yeah, I'm thinking probably the 50 here, maybe come on dropping down to that target. You can kind of see here, if you look left, how that aligns with the support and resistance right there. So it's clean target. It works out really well there. What is that exactly? Here on Coinbase, that's going to be 46,267 or so. But again, if it continues down through there, your 61.8 gets you into this demand wick right here on the 1 hour. So if it dropped below that wick, then I would definitely look right here at the 70.5, which gets you right into these demand wicks right here. So that's kind of how I'd watch it. Now, if you're falling down below this swing low here, this 44,874.80, I think at that point we look back at this and go, okay, is there a way we can get an ABC out of this? Excuse me. Because I think once you're dropping below that, it really, the odds are, I think, much more strong that price is going to continue lower below this swing low. And I think in that case, again, you've got a 1, 2 here, 3, 4. Maybe 5 here. Maybe you have an A, a B, and then a C here, or even 1, 2, 3, 4, 5 here. So it gives you an A, a B, and then a 1, 2, 3, 4, 5 maybe. So, I mean, it's still possible to get an ABC potentially out of this, looking here at the 1 hour. So just be cautious if it does drop below the 44,874. Until then, I think we're still probably looking for some upside with it. But if we're getting below that, I think that means ABC done there. And again, in that case, we've got either an A or a 1 here, and this would be a B or a 2. Guys, I can't jump on the emotional bullish train. It's a much more, it's a better idea to be smart about it and to see where things are, see where things are, possibly. That way you can protect yourself in case the bullishness is a bit wrong. Again, we had this strong move up, and that's to be expected after such, this strong move here. But if price can't make it through this pivot, I mean, here it tried and got rejected in this daily supply. That's the daily supply. If we zoom out here, that's where we got zipped out of here. See that? Pushed right up into this daily supply, almost to the EQ there, getting up there. And then drop back down, and look, we're finding that support right here. But the last thing you want to see is this close today. If you're watching the daily, the last thing you want to see is this closing, below halfway of yesterday's candle or further. The closer today's candle closes to the bottom of yesterday's candle, so the closer to the pivot it closes, the more likely this may be just 3 up here and done, as I was just saying, and we're heading further down. Now, again, that doesn't mean we have to go way down to 3,000 or anything like that right now, but it just means that locally we want to get some better clarification. It is not clear exactly what's going on here, guys. So I think we still got further upside here. I think the bottom, 4 may be done, maybe. But I'm not willing to say, oh, it's definitely done there and just put in a buy without a stop loss right now. That's for sure. Let me see here. What's going on, Oscar? Can I take a look into the output mic volume? The video streams are very low on volume. If I'm looking at it, let me show you something. I think it's got to be on your end, because if I bring this in here, you see when I'm talking here, you see it's up in orange, and many times it goes into red. So that's telling me my output is very strong. My decibels are way up there. So I think it's got to be on your end somewhere there. Yeah. So, again, unfortunately, that's about where I can get there. When it gets into the red, it starts getting really distorted because that's really high volume coming in. So be sure to check that out on your end there, buddy. I hope you get it figured out, man. I definitely want you to be able to hear what I'm saying well. But, yeah, I don't want to... If I get much louder there, this will really come out loud and distorted on everybody's end. So, let me see here. Yeah, definitely a bigger room. Like I said, hardwood floors, so the volume's going to echo a bit. Get a little clearer and louder. Let me see here. So, yeah, let's see. What's going on, TV Canal? I see you checking in, buddy. It says we need to get the 70.5 to get down, which is about the 54,000. Yeah. Again, I'm a big fan of the 70.5. That'll take you right to this area right here. Remember, it's always in terms of when I'm talking to you guys about price, I'm always looking at what's going on here in terms of the trading ranges. So we've got this large trading range, and then we've got this little one up here that initiated this decline, and then we've got this one right here which caught, this tail came down here, it caught the decline. And so it's right here about the pivot. So things are good as long as we stay above this daily pivot. If we're dropping back below that, the odds are we're probably getting below this swing low here. And then we're going to likely, jump on into this trading range here. And if we're doing that, then price is, significantly likely to at least hit the EQ here at the mid-35s here. But, again, if we take everything else off, then we just look at pivots. If we're dropping through the pivot and drop below this swing low here, we should generally expect to get to this S1 pivot area here. So the low 30s here, 32, 33,000. That's just everything else aside if you're just, using pivots. So right now, your big thing is, does price stay above this daily pivot here? Now, you can notice the pivot is down here, but we've got the high volume node just a bit above it. And that right here is where price is getting this support at the moment. So, again, dropping below this pivot means that you're going to have more supply pressure. Right now, we're above it, which means we have a little bit more demand pressure. But again, if it does drop through it, they're going to flip to more supply, which will just make it doesn't mean it has to go down, but it just means you're going to have to exert more demand effort to get it back above the high volume node area there. So really, at the end of the day, guys, if you want to make it simple on yourselves, just watch and see. Do we get above this swing high here on the daily at 52,107? Or do we drop below this swing low down here at 43,016? That's really the two levels you need to watch right now. If we get above this first one, then it means we're probably, done with wave 4 here. It doesn't guarantee it, but it means, the odds are increased significantly that we are. And if it drops down, obviously, below this swing low, it means we do have further to go. And at that time, I'm looking here at around, 35, 36, and then down here at around 32, 33 as my targets to the downside. Just big general daily targets on that. Let me see here. Yeah, Oscar, man, I don't know, buddy. A lot of, everybody else is kind of saying that they hear it loud and clear and fine. And I showed you there on my thing that the output is really coming out strong. Maybe you might just have to, I don't know if you're watching, it looks like you're watching on YouTube. Maybe just reload the browser or something. I don't know. I wish I knew something more to tell you, man. But again, like you saw, it's coming through pretty loud from my end through the software. Let me see here. Hey, what's going on, Chris T? It says, my view on raising interest rates and falling dollar combination having a potentially negative impact on Bitcoin. Thanks for keeping up a great channel. Been following for many moons. Hey, man, I appreciate you. Thank you, man. So, again, this is something I had talked about for a while, guys, is that interest rates, were likely to rise. Remember, everybody's talking about how, and the Fed talks about how they're going to keep the interest rates low and whatnot. But the real rates, man, they're headed up. I really do. I think we've got interest rates rising. Now, if interest rates are rising, I don't know about the dollar falling. There may be some overlap at the beginning as the rates start rising, as the dollar's maybe finishing its again, we're looking at it potentially coming down a little bit lower here. So, maybe getting a new lower low down here. Maybe there's going to be some overlap there, but if those interest rates are rising, we should see the dollar rising with them. Because, again, interest rates rising add to a stronger dollar, right? Because you're able to charge more for that interest, so the dollar's worth more. And then if your interest rates are rising versus your other currencies, that just makes your dollar the much better place to be against your other currencies, which just amplifies the effect of the dollar rise. Let me see here. Let me see. Oh, let me kind of catch up with you guys here. So yeah, again, when I'm thinking about this, I do think we've got interest rates will be rising here. That's something I think I talked about probably about midway last year, about 6 months ago. I was talking about the likelihood of interest rates rising, even though the Fed was talking about keeping them low. You just can't push off what the market wants, when the market really wants it. This is the same thing. Remember, if you guys have been following me for a while, you remember back in, 2018 or 19, the Fed had talked about they were going to have they were looking at 5 more interest rate hikes over that next year. And I said, no, it was toward the end of the year, probably about October or so. And I said, no, I think this is it. I said, we're probably going to have a decline in interest rates. And sure enough, we had a decline in interest rates over those next 5 sessions, those next 5 periods where they were, going to be saying they were going to be raising them. And I think we're kind of getting the same idea, just the opposite side now. The Fed wants to keep them low because, the Fed's trying to encourage people to spend money, to take out loans. Remember, guys, I keep talking about the fact that we're, a debt-based economy, which means we're a credit economy. That's what it means. And so the only way that you continue to grow in a debt-based economy, in a credit economy, is for people to take out more credit. You need that expansion of the dollar, you need the inflation of the dollar. But the problem is they're not getting that. Even, they need people to do it because that dollar creation comes, again, at the bank level when people go in to borrow money. But instead, people are selling to pay off debt. A personal example here, the previous place we were at that we just moved out of to move out over here, I've refused to buy so far because I think it's the top of the market here. So I'm leasing for another year. But the previous place that I was leasing there, we had to get out of there because the guy, the company, him and his partners that own the property and some other properties were selling their properties to get out so they can pay down their debt. And this is what we're seeing across a lot of a large swath of the public right now is people trying to continue to pay down their debts. And remember, when you pay down your debt, you're destroying dollars. You're sending dollars back into the bank. And so if there's not people coming in to pull out more loans, the dollars just sit there. There's nothing, there's no expansion. There's no inflation going on. And that's what the Fed is dealing with at the moment. So, again, that's kind of where I think we're at. I think those interest rates will keep rising. Will start to rise here, head up. And I think that the dollar, if the interest rates are rising, the dollar should be popping up with it. And with that happening, again, guys, I know you don't want to hear it, but with Bitcoin and everything else, necessarily, if the dollar's rising, assets that are valued in dollars are going to drop in price because your dollar becomes more valuable. So it takes less dollars to buy that thing. So the value, again, the value of the price of that thing drops. The big problem with that whole debt deflation spiral I talk about is you've got that going on. And on top of that, then you have people going out of business. So you got people, so then they have to lay off their staff. And so people become unemployed, which means then maybe they can't, pay their mortgages. So they go into foreclosure and they have to get auctioned. And so the prices of things then start losing value because things are being sold or being written off as losses. And so then you have that dragging down the value, plus you have the dollar going up, which is dragging down the value. So net worth-wise, people that are, paper assets, they lose their value, they get down there. And then it continues the spiral of back and forth and down until it hits that equilibrium. And I it seems like that's potentially where we're headed. It still has to finish through, but at the end of last week wasn't good for stocks, all through last week. Bitcoin's having its trouble at the moment. Everybody's talking about, even today, I see these things, all this institutional buying, this Coinbase outflow. Well, that's all great. Who the heck's selling? Because price is still, on Bitcoin here, it's still low. Look at this. We haven't really overcome anything. Look at where we're stopping here. Right here at this previous resistance, right over here, all the way from here in the mid-February to right over here at end of February and then now. I mean, that's all we're at, guys. So we're still down, even at the high here at almost 49.5 there, around 49.5. That's still quite a bit down from 55 there. That's still almost 20% down. So price hasn't done anything significant. This is a nice candle. But remember what I told you, these bullish or bearish engulfing, when they're from the top here, this is bullish engulfing from the bottom here. That's a good first step, but it could just be a pause before further downside. We have to see another bullish candle here to give us follow through. That's what you need to see. This one candle, this bullish engulfing candle by itself is not a reversal candle. Now, it looks good, again, with this almost a hammer here. It's not quite a hammer. It's got a bit of a wick at the top there, but almost a hammer there. So, there's a lot of positive potentially in here. You just got to see follow through. But the reality of it is at this moment right now, Bitcoin, stocks, everything are having a lot of trouble. Gold, silver, everything. Oil, it's all down. And the dollar, strong move up. But the dollar still remains below that wave 4. Again, my count on the dollar here says 3, potentially 4, and then 1, and then a flat here for an expanded flat for 2. That's what I'm kind of viewing right now. Now, my other possibility is maybe, and this is less of a possibility, I think, but maybe we've got an ABC as a 1, ABC as a 2, maybe an ABC as a 3 somewhere in here. I say 3, I'm sorry, A, B, C. You'll have D and E as a triangle here. Then it come down. But price has to continue to consolidate here. If it goes above this swing high here at wave 4 at about 91.602, then that invalidates the triangle. And it potentially invalidates the idea that this is 3 and this is 4. It kind of really adds strength to the idea that maybe the bottom is in here. So I'm really still kind of iffy on this. I was feeling pretty good about it going down further here until I got this recently. And now I'm like, okay, well, we need price action to kind of tell us what's going on here. First move has to be above wave 4 there. And then we'll need it to get up here above this wave 4 that we've been looking at for a while. Until that point, until it's still below here, you know, it's still, I'm looking for it to head further down with it. And again, if it's going down, then the other assets have, you know, the ability to breathe and potentially rise. But as long as this thing's rising here, guys, that's going to put a heck of a ton of pressure on price for anything denominated in dollars. Let me see here. Let me see. Just kind of catch up with you guys here. Let me see here. Oscar, hey buddy, stop making you seem like you're crazy. Yeah, I know, man. It can seem like that, man. You know, and you know what? It might even be just something with your connection, your internet connection at the moment. It might even be something as simple as that. Nothing that you're doing, but just that your internet connection. There might be something on that that's keeping the volume from flowing through like it should. So I hope it kicks in, man. Yeah. Let me see here. Let me kind of catch up with you guys here. You got cucked. Okay. What's going on, man? It says, if you look up material indicators on Twitter, he has some cool data on Bitcoin buyers, sellers by order size. Basically, the peasants and the whales are buying right now, and everyone in between is still selling, at least in the U.S. You know, and kind of when I look at that goes along with what I was just saying a minute ago. So, you know, I know. So sometimes, guys, when I talk about this, I know it's difficult to understand and really difficult to get on board with what I'm saying. Because everything everywhere seems so bullish, right? If you're stuck in Twitter, especially, Twitter's the place, right? I mean, yeah, we've got some people talking on Facebook and other social media platforms, but really, Twitter's the place, right? FinTwit, CryptoTwit kind of thing, right? But again, you know, it's generally your feed is going to be curated for you. So you're not going to get an overall look at everything. And then when you look at the bigger players that are in there, they're all very bullish. And it makes it seem like, well, they got a lot of money. They're really successful. So if they're bullish, that means everything must be bullish, right? But again, the reality of it is you've got all these mentions of all this money all this Bitcoin being bought. And yet price still remains, as I was trying to say, still kind of just remains here. So in spite of all the $1 billion+ that's been bought here, price still isn't really moving anywhere. And so, you know, you got to get out of just the whole buy side and go, okay, well, heck, somebody must be selling then. I mean, it's great that we're getting that buy. That's the first part of what we need. But remember that the one side alone does not, you know, make a market, right? So you have to consider that there are some guys or some guys out there, you know, gals maybe, whatever, but some people that are really selling in bulk. And the thing about that is, if they've got intentions and they've got enough supply, you're gonna okay. Sailor's been in there buying, right? And then they bought at 15 million. I saw the dumbest thing. So with there was an article the other day with one of these crypto silly sites, right? One of these news sites, right? And they said, Bitcoin's price rises. Talking about this right here. On Sailor's Sailor's MicroStrategy buying 15 million more of Bitcoin. Remember, guys, I told you, as people, we tend to associate news events with price action when we want to, right? We ignore it other times, right? Because the reality of it is, he bought $1 billion worth here, and price didn't go up. But all of a sudden, his little 15 million buy here is what sends it up? Are you kidding me? No. That's stupid. You see what I'm saying? And I don't mean to be so harsh, but dang it, we see this stuff all the time. And unfortunately, new traders, new people come in and they think, oh yeah, look, the news is right. He bought 15 million. That's why price went up. Well, no, if price is going to go up because he bought 15 million, why didn't price go up when he bought $1 billion? Right here. $1 billion versus 15 million, right? And also, you know, again, Square's 170 million and all the other stuff that's been bought there. So I guess, and what I'm saying here is, you know, Saylor's been the big point, right? The big point buyer, right? So what happens here? What if this continues going down? Does Saylor go out and raise another $1 billion to buy more? Can he? He's raised, what, $1 billion or close to it a few different times now, right? Is he running out of resources as price continues to drop? Can he convince more people to buy $1 billion worth of debt? How much debt is he going to sell in the company to continue buying Bitcoin? And what does that mean if this continues dropping lower? Now, right now, his average cost here is around 24,000 and some change, right? So he's good right now. He could sell it, well, he can't sell it all at once, but he could sell and potentially get out unscathed. You know, maybe make a little bit of money. You know, but that's a lot of selling pressure if he was to do it. But what does he do if it continues dropping? You know, is it, I mean, it's maybe he can find people willing to buy. But as this continues to drop lower, you're going to have more and more people jumping in with the sell because they're like, oh God, it's going to continue going down. What if this is the top? What if we've got some giant head and shoulders going on here? What if price comes down here toward this low 30s, pops back up here around the low 40s, and then drops back down? That would give you a target here. You know, basically, what if this is going on here? Now, I'm not saying this is, but what if, guys? So it would probably drop a little bit lower to get a spring here. So probably something like this, maybe. Let me see here. Yeah, maybe into this little area right over here. So maybe right about there. And then you get to pop back up here. You get rejected and it comes down. All of a sudden now, everybody's telling you to buy the dip, buy the dip, buy the dip. And so you're buying the dip religiously, right? Hoping it continues to go up, and it continues to go down though. And then it gets down here and you're like, you know, it gets down here like, oh, you know, it starts moving up. You're like, oh, finally it's going up. Thank God, I'm okay. And then it doesn't. I mean, if you're dropping, I mean, geez, that's just way, that's $30,000. That's too high. That head and shoulders doesn't even work. So we're probably not going to get a head and shoulders here, but the significance of a drop through that's a $30,000 decline there. That's a $30,000 decline. Take it to below 30. That's significant. So we'll have to see how it continues to go on right now. I mean, again, it looks like, nah, it's not going to be there. But if it was to continue lower here, it should notch a lower low below that swing over here. But minimum, you're looking at this trading range here as a target. So if this thing, you know, if this is to be some kind of top up here and it's going to come down below this swing low over here, I mean, you're potentially looking at your target down here of about, that's 18,175, which just takes you into this bit of right here. Look at, oh man, look at this. Did that hit the EQ? Almost. This little bit of trading range right here. If it gets down there. But again, I'm trying to get you guys just not to be overly emotionally bullish because somebody says, oh, look, all this buying that's going on. Well, yeah, the flip side of that, the only reason they're able to buy that much is because somebody's selling that much. And price isn't going anywhere yet. Yet. It may. So I don't want any of y'all running off here saying, oh, he said it's definitely going down. No, I'm just saying that right now it's definitely got to prove itself. This is not as clear cut. It's going up right now as people may want you to believe on crypto Twitter, guys. Let me see here. Dominicus, have a great day, man. Thanks for checking in. Let's see here. Common Man says silver hit the bottom today. Let's go ahead and check that out, man. Yeah, let's go ahead and pull up silver. Silver is looking a little bit better than gold, but neither one of them really looking good at the moment, guys. Let me see here. All right. So silver right now, I've kind of got this going on. We notched a lower low off this low over here and off this one back here on the 4th of February. That's significant there. it is 4 down. So I've got 1, 2, 3, 4, 5, and then I've got an A, a B, and a C, and then 1, 2, 3, 4, 5. So could this potentially be an A, a B, and a short C here? Sure. But right now, until price is getting above the swing high up here, I mean, it's definitely got to get above this, this $30.35 to really kind of say it's going to go up. Earlier than that, I mean, wave 2 here at 29, doggone it, at 29.49. It's got to get above that because, that's a wave 2 of this 5 down. Right now, again, below the 1 and the 4 hour, we're below the pivot there on the 1 and 4 hour. We are topped out here just about in overbought. Stoke RSI is almost bought here on the 1 hour. We do have some volume in this area showing up. So you've got selling kicking in there, but it's kind of reversed up here locally, which is kind of set it up. But you can notice right here trying to get out of this. You see this previous resistance here? Always look left, guys. Always look left. So you've got kind of this area right here. And you see how the volume kicks in right here as it's trying to get through it, and then finally it breaks through. That was kind of the opposite of what we were talking about here on Bitcoin. When we talk about this right here. You had the volume kick up as it kept trying to get up, but it was rejected ultimately and came down. So, again, kind of coming down here, whereas over here, it was able to overcome that and pop up. But if I'm looking at this, I'm going 1, 2, 3, 4, 5. So there's an A and then a B. 1, 2, 3, 4. I'm looking for a 5 up here, potentially the 50%, which is right at the EQ of this 1 hour supply structure here, right around $27.12. If we get a rejection right around that pivot area, that area right there, and we drop down below, again, where I'm looking at this swing low here at $26.30. If we get below that, that's your indication that wave 2 is complete and wave 3 is in progress, quite a bit lower down at that point. Right now, as a matter of fact, if we get that, if it makes it to that target right there, that would then give us a minimum wave 3 target down here of around 22,875. Yeah, okay, and then gives us a minimum wave 5 down here at $21.87, which, as you can see, is right here around the S2 1 hour pivot. Now it's just right now, but I don't think it would come down there, I don't know, 5 days from now, maybe it could make it down here by the end of the week. So, just some things to watch if this is correct, if this count is correct. But, the count's going to be bearish until it gets above, up here above these wave 2s. Until it gets above this wave 2 and then this wave 2 and then even, this wave 5 up here. It has to get above that. If we jump to the 4 hour, your 4 hour is about to hit overbought here. You had a bit of bullish divergence here on the 4 hour, which was a buy signal, good candle there to buy. But yeah, a little bit further upside before 4 hour gets an overbought there. Oh yeah, see the daily's got a lot of downside it could do still. Not saying it has to, but we're basically neutral here at about 49 on RSI, and it's not even an uptrend or downtrend. I mean, we were uptrending. And then we're just kind of sideways, I think. We kind of hit the top there, We're kind of just sideways. But Stoke RSI has room to continue to fall there as well. Let me kind of zoom. Whoops. My only thought is that we've got this gap here that would likely be filled. If price is going to be bearish, if it's going to continue down lower, I think it's going to fill this gap first. So that's up here at that closed at 27,635 area. Again, we could see it go up here. Remember, this is my initial target here at the 50%. But if we continue up through there, again, definitely be looking at the 70.5 and then 78.6 up here. And that would get us filled in with that gap that was showing up there. So, yeah. Let me see here. Let me kind of catch with you guys. What's going on, JP? I'd be interested in hearing about the 10-year in the U.S. and why that impacted equity prices so significantly. That all has to do with the, if you're looking at the front end and the back end there, the yield curve, and you're looking at them shorter term, the 10 years, that shorter term versus the 30-year rate. So, bonds are doing some crazy stuff right now. Everybody's been kind of waiting for them to move, and then they moved at the end of last week. But again, I think what's going on here, the bigger picture, I think, is that, things work like they work until they don't anymore, right? So, again, if we're looking at, let me kind of pull up the Dow Jones again, guys. Again, let me use that as my my big explainer here. Let me get this here. All right, so for the Dow Jones, remember, I kind of pull out this larger term chart here to kind of, talk about, because in everything, my thesis, my whole everything comes from what's going on here with the Dow Jones, over over quite a while here, because it's the longest term market we've got here to kind of look at, right? So we can look back here. We can look at the monthly back here toward, the Great Depression here. And so in terms of, that's what I was talking about last time. Let me kind of get rid of that. So, we have this idea of how bonds and the yield curve and all these fun little things are supposed to work and create all these things, right? As we're moving up through this. And so it should kind of work the same as it's going through here. You got the same understanding. The problem comes if this is what I think it is, again, where we're looking at this grand super cycle top, which is a much larger thing. So, when you look at how do treasuries and all these things work prior to that, well, you're still within that large thing. So there's still room for price, for those things to continue working the way they work. But if this is the credit bubble top here, then it makes sense that the way you think things work here are going to get kind of wonky at the end here, because all of a sudden the market just goes, no mas, no more. We can't do it anymore. We're not taking out more loans. And so all these other pressures that you have, because remember, when you're talking about monetary policy and, and inflation and deflation and all these things, it's very intricate. And so when things start happening differently, which they would here at this credit bubble top than anything they have at these prior these little pullbacks along the way, right? So things happen different here. All of a sudden, the way in which, bonds and interest rates and the yield curve, all those parts of the yield curve, the way all these things kind of come together is going to potentially change compared to what it did previously. Because previously it was within that cycle. So it could continue to overextend. It could continue to do the things it was doing. But, again, one of my examples to kind of explain this is during Bernanke, when Bernanke was head of the Fed here, where's 2000s here? Yeah, over here. During this period here, under his leadership, the thought was that if you had very low very low unemployment, and we did, for the last couple of years prior to the pandemic, we had, 3.6%, whatever, really low unemployment rate, right? And so the idea under him was, if the unemployment rate is low like that, the running thought process they were using was that interest rates had to rise necessarily, right? And so what we found is we got to 2020 was, no, you can have that really low unemployment and really low interest rates. Remember, interest rates were below 1%. So that's, again, when you look at the way people believe things work or have believed things work, up till now, and all of a sudden those things aren't making a lot of sense. They're not working how you would normally expect them to work. To me, when you think in terms of the larger market and you think of these waves and these cycles, because everything's cycles, man. Everything in life and, markets and everything is all cycles. When you're getting to that larger cycle top, all of a sudden things aren't going to work the same way they did in there. And I think that's where a lot of people are really kind of just freaking out about what's going on, with your 10-year, with everything that's going on there and what everything else is doing. I think, without getting into all these really deep concepts and whatnot, I think that's probably the easiest, most general explanation I can give to that. Because honestly, we don't know for sure. We don't know for sure. Everybody's going to have ideas. It's like I keep talking to you guys about, I've got my ideas about what I think's going on with the macro look and why and all these things. But I don't know if they're going to be correct, if they're going to play out like that. And as I told you, the Fed doesn't know. We've talked, you've heard Jerome Powell. We've kind of talked about it a few times here. When he gives his comments, everybody's like, oh, he said this. And then I go and I say, yeah, but he didn't say this. You guys are, he's very precise in what he says, but people tend to extrapolate that to a general understanding, which is not correct, because what he says precisely, if you listen to it, is we really don't know if this is going to work. We think that if we do this, it should lead to that, but we don't know. And if you really listen to them, that's what they're saying. And it's not that anybody's idiots. It's not that anybody's stupid or whatever. It's just that this whole macroeconomic global finance interconnectedness is just significant, that intertwined and difficult. You move, if you've got 10,000 pieces, let's say you've got a system built with 10,000 pieces to it, and you move one, that's going to change the whole thing, right? And so if you move a couple of them, it's going to change it even bigger, right? And so that's the kind of thing here. They could say, well, we're trying to move this piece to make this happen, but we're not sure how that's going to affect things between that piece and that end piece, so it may not happen like we think it's going to happen. And I think that's kind of where we get with all that. Hey there, WattR21. Good to see you, man. So I hope that works. As far as an explanation goes, I'm considering doing a more series of just recorded instead of live videos, where we get into much more depth, much more, much deeper look at the macroeconomic side of it. But I think for most traders that are on here, it's really beyond anything they want to understand. And I think, they just want the simpler, more general, explanations maybe. So yeah, that's why I kind of stick with that. Let me see here. 15-minute makes Bitcoin moves? No 15-minute makes the moves. Let me see here. Let me kind of catch with you guys here. Tell you right, I'm saying these are the same people that talk about a 2% wealth tax in the U.S. making everyone a millionaire. Yeah, here's the funny thing, guys. When you're talking about wealth distribution and whatnot, and this is the big argument for Bitcoin right now. You have to think about it. When you're in it now, everybody think about it, guys. You hear them all of a sudden talking, or not all of a sudden. This is what I've heard. Guys, I've been in Bitcoin here since beginning of 2017, right? Before the big run up, right? And so the one thing that we constantly hear about is how Bitcoin is going to, how do we put this? That Bitcoin is going to be the largest transfer of wealth, and it's going to be from the haves to the have-nots. That's the argument, right? If you will allow me to be honest with you, that's likely not going to happen. Honestly. Historically, we know anytime stuff like this happens, anytime technology comes in, there's going to be a few people who get in early and who benefit from it. But in general, the populace tends to get in when the big guys are already in there. And the populace gets in and they don't know what they're doing. And the big guys, the wealth continues to come from the little guy to the big guy. And I honestly think that's what we're going to have here. You're going to have people, and maybe what you would deem as a significant number, benefit greatly from it. But in the grand scheme of worldwide numbers and whatnot, and even here in the U.S., it's not going to make a dent on wealth transfer. It's not going to make a dent on that wealthy. The wealthy aren't going to lose their income, their wealth to the little guys in general. So most of the time, it's going to be the little guys losing their wealth, whatever they have, to the other little guys who do it properly. But I don't think you're going to have this grand move from the suits, to the t-shirts. Now you got Davey Day Trader there, who uses that as his shtick to get y'all to listen to him and to pay attention to him, so he can make money off you guys, via social media. But he always talks about the suits and all that. Man, you know what? He's a suit. You got not to that extent. He really is more of a based on what I've seen of him so far, he seems to be very retail in his trading. Remember, guys, in a bull market, everybody's an expert, right? And when you get to the ends of the bull markets, again, like the end of 2017 here in Bitcoin, where you could basically just buy anything and it goes up. I mean, that's been what's been from the March lows, right? But you saw what happened when he got to Bitcoin, right? And Link, right? Got trashed right away. Had no clue what he was doing. He still doesn't know what he's doing with stocks. But as long as he frames it as him and you against the suits, you guys are going to listen to him and you're going to, pat his pocket. If you'll notice, I never talk like that with you guys. I've got more respect for you than that. And unfortunately, that means a lot of people don't follow me. Because I don't blow smoke up your rear end. I'm not emotionally bullish in any market. We talk about the realities of what's going on and, the levels to watch and things you should watch for, the possibilities. At the end of the day, though, trading it is up to you. It's your money, guys. You got to decide when it's worth you to enter or exit. All I can do is give you information and look at things, tell you why I'm looking at things and how I'm looking at them and why. But it really is ultimately up to you to kind of digest that information and decide if it makes sense for you to enter right then or not. Everybody else out there, guys, they're going to make a ton of money off you via social media. I'm just here to really help you out with trading, guys. So that, when we look at that, that gets you, the whole thing I'm trying to say about this is that gets you to that thinking that, that idea that, oh, it's going to be so much better, right? It's all, again, Bitcoin's going to take the centralized power away from, governments and the wealthy and whatever. And you're going to be one of the wealthy now, right? Guys, those are just shticks. Those are wishful thinking. Those are just things to get you to jump in head first without checking the depth. Without learning how to swim first. Without checking to see if there's ice on the pond that you're dumping in head first into, right? But because that's how you sell. That's an easy way to sell, guys. If I was dependent on this income for something like that, and I wasn't the person I am, I'd do the same thing, I'm sure. But, again, thankfully, I don't have to. So I can be honest with you guys. And whether you want to listen to me or not, that's going to be on you. That's going to be on you. But I think there's a lot more to be said for being smart about your trading than being emotional about it. So, yeah. Let me see here. Yeah, I don't like head and shoulders patterns in general. Again, they're just so easy to misinterpret, and so many things look like it and then end up not being. And I don't like doing it. I mean, myself, I can do it. That's fine, but I don't like doing it here with a lot of new traders because they don't really understand how to properly address a head and shoulders pattern, and how that might play out. What to watch for and how to look at it and whatever. So it's kind of like saying, again, if you have a hammer, everything's a nail, right? So if you think the head and shoulders pattern is what it is because it just this kind of look to it, and you don't understand how it really operates, then, you end up losing a lot of money with it. Let me see here. Can I do the DeFi index? I've got that here. Let me see what I've got. We update these twice a week, guys. Right now, these crypto indexes for Tier 3 members. So DeFi here. This is what I've got going on here. If I can get this kind of lit up here. So for Tier 3, we'll be updating these today. But I think it's significantly important to notice where these volume spikes are coming out up in this area here. Right here and right here. We do have this. We had this bearish divergence playing out over and over again as we kind of went up here, and then we had the pullback here. But I'm thinking if we're going to get a higher high up here, I'm thinking we may still continue this lower here. I think it's, potentially getting toward top here. This is the daily. You can see we've broken out of oversold here, pushing up. We're kind of coming through the pivot here. So that's a lot of good stuff. If this is a pull down, if this is a 1-2, then generally, let's see here if I can see this correctly. Man, I need to get glasses again, man. Don't get old, it's a trap. Let's see, right there. So this gives us a wave 2, or a wave 5 coming off this low here, right around 14,775.80. I think it's possible DeFi may be getting ready to go again. I want to see it get above, let me see here. I want to see the index. Yeah, so you can go 1, 2. Now see, I don't know. If I look at this off the top here on the 4 hour, I've got a 1, 2, 3, 4, 5 maybe. This looks like a 1, 2, 3, 4, 5. A, B, C. But see, then we've got this ABC here. And now we've got a higher high here. So this may be, let me zoom into 1 hour here. Let's see here, 1, 2. I think the only way this really works as an ABC down is if we get a 1, 2, and then we get a 3, 4 here, and then a 5. ABC, 1, 2, 3, 4, 5 here. Then you got an A, be an ABC, and then you've got a 1, 2. Man. So even if I'm looking at this here, I'm going 1, 2, 3, 4, 5. Okay, so maybe a leading diagonal here. Maybe we can go like a 1, 2, 3, 4, 5 here. 1, 2, 3, 4, 5. So then A, B, and then C here. Then move up. Yeah, I mean, okay, so it's possible we could be heading up here. 1 hour's reset, but man, that 4 hours is way up here. And right now we've got tweezer tops and possible bearish engulfing with about an hour 40 left. I'd watch this 4 hour at the moment. This could be topping right here. Again, tweezer tops, bearish engulfing. If this 4 hour closes something like this and then you get followed through with the next 4 hour, I mean, I'd be looking at least for it to get to the pivot. If it drops to that pivot, we've already dipped through this. I think this is the daily supply structure here. Yeah, we've already dipped through that. I'd be concerned that it's going to drop down here lower. I think it's kind of iffy at the moment. Look at that daily right there. If it does get above, we'll do this. I would be bullish on DeFi in general if we can get above. Man, I want to play it safe here. Above this one right here, this swing high. This $12,028.90. If it can get above that, I think at that point I could be a bit more bullish on DeFi. But this might be a final 5 up here. Again, if we're looking at this as a 1, 2 here, that gives you that 5 up here to around that 14,775 here. Now, whenever that happens, if you're breaking, and it doesn't have to get all the way up there. Remember, you can have a short 5th wave there, kind of stop prior. But if it breaks out of the channel here, based on the height of the channel, there's a pattern target of 9,563.8 points above the point of breakout based on the height there. So we could see that continuing up there through it. But I think I'm watching it right now. If I'm you, I want to see how does this 4-hour close and do you get follow through on the next 4-hour? Because if you do, you want it to stay above the pivot. If you can get a bounce off the pivot and then move up, then maybe that's a 1-2 and a move up. Which would mean your wave 5 would go even higher. But if you're dropping through that pivot, you get real, all of a sudden this is, this swing low here is really, it's put on notice. It's real susceptible to getting taken out. And if you take out this swing low, then because of this daily, I'm going to show you something real quick here. The way I do my supply and demand structures, let's see, it's not even daily. What is this? Is this the weekly? It's the weekly. That's what it is. Okay, so the weekly is a little bit more open. Okay. What I was going to say was usually with my demand and supply structures, if you have price hit that EQ area, and in this case it would bounce up, and then it comes back toward that EQ area again, usually that tells you that this supply, or this, in this case, this demand structure is going to be eaten up and it's going to head to a new low. If it happened at a supply structure, it would head to a new high. This is the weekly demand structure though, so we're still good on that. But you could see this weekly pull back toward this EQ here. I wouldn't be surprised to see that at all. 8,400 here, potentially. So yeah, I think locally you're watching that 4-hour to see if we get that close near the lows of the candle, because again, it gives you a swing. It gives you that tweezer tops and that bearish engulfing, and then you want to see if the next 4-hour has follow through. Because if it does, I think then you're probably looking. You got to hope that at least the pivot holds. If it doesn't, again, I think this becomes susceptible to being taken out, which means this may quite possibly be taken as well. You can throw actually a 4-hour demand structure here on the wick, on this 4-hour wick. Right there. And so you've already dipped halfway into that upper half of the, so about a quarter of the way into that demand structure there. You really need this 8,000 area, 79.55 to hold. If you're losing that, I think that might say that this is the top here. It's headed down. So, yeah, I think it's what you're looking for right now with that 4 hours. Probably the best way to look at it. How can you say oil is done when it has done 90% since November and it's down 7% the last 4 days? What's going on, Sam? So oil. I'll show you what I'm talking about. Here's oil. Oil may have potentially completed 5 waves up off the bottom. Off the bottom down here. I don't have all this other stuff. I haven't redone this yet, but basically this would be the top up here. And so for right now, what we're looking at is potentially a pullback here. It's going to get us back, down into the 40s at least. As a larger, this would be a wave 1 completed. I've got to go back, like I said, and adjust the other waves there from that first bit up. But continuing it up here, this comes to a wave 1 potentially. So what we want to see now is, does it drop below this wave 4 swing low here at 58.60? If you do, that's the first clue that top may be in for right now, and you would expect to see a decent move back into the 40s, at least potentially the 30s. But the bigger picture, let me kind of take all this off here. Whoops. The bigger picture is, again, we had this big drop down here. We had this big low down here at around $40.32 down there. And so basically, I have to redo the count, but basically you're looking at like a 1, 2, 3, 4, 5 kind of thing going on here. If that's 5 up, again, the pullback, is going to get you this big move down. And so that's what we're kind of looking at. I mean, right here, if we're looking at where we are in relation to looking left here, if we look here, you see how you've got this resistance, support, and resistance a little bit lower here. So your resistance is kind of this area right here. And then you've got right there is also your support. And that's kind of where we're at the moment here. So just in terms of everything else aside, just looking at the structure here, we can even zoom in here to the weekly. We've got that there. Now, if we look at this and we go, okay, well, here's a 1, right? Or I guess it's not a 1. We'd be looking down here. So if you look at this potentially as a 1, 2, this necessarily has to be a 3, a 4, and a 5 to get this low off down here. But I'm not sure I buy that. I've got, if you're in Discord with me, then I'm still holding on to this possibility that we may have another lower low or something pretty close here. It could be a truncated fifth. Pretty close to that May crash. Now remember, in May it crashed because WTI contracts, remember, they differ from your Brent. Because Brent you can settle in cash. WTI, if you're holding that contract at the end of the contract period, you have to take physical delivery, or you have to take delivery of physical oil. And what happened here in May was that normally what you have is you have your airlines, your cruise ships and whatnot, who take, they're taking delivery for ahead of time, again, getting ready for, trying to stay ahead. And because of the pandemic and everything shutting down, they had no need for it. So all of a sudden, a lot of people were caught with it. And then you had it dropping down. Then you had a lot of retail jumping in there, having no clue what they're doing with oil, buying oil contracts, not knowing they had to accept it. And all of a sudden, it comes up at the end, and they don't have anywhere. If you're trading WTI, the Cushing, Oklahoma, is where your main point is. And their storage was all full. It was all taken care of. It was all paid for. So what do? It's not like you could just take delivery and then store it right there, right? So all of a sudden, people were jumping on and getting ships to get it delivered out to the ships and hold on to it for a year maybe as prices rose, and then they could dump it on the market, And so a lot of people, I told you at that time that was what was going to happen. And I said a lot of people are going to make a killing because at this point, when it's below $1, what that's telling you is whoever is selling that at that price, they are paying you to take delivery. They are paying you to take delivery. And so, these people, all this oil they've got, little money up front, they're being paid to take it. All they have to do is find somewhere to hold it, to store it. Even the Brent is going to be on, is already going to be on ships. This WTI, West Texas Intermediate, here in the U.S., it's the U.S. oil basically. It's transferred in pipelines, so it's not already on ships. But if we look at this, and I go to count here, I mean, if I look at this, I go 1, 2, and then I go 1, 2, 3, 4, 5. So 3, 4, 5 potentially. So I'm still looking at that potential. And why would that happen? Because things aren't as rosy as online people want you to think. Markets are going crazy. Look, the markets are still going up. It's asset inflation via QE, guys. This right here, you expect a strong move off here because you had a strong move down. You had a sharp decline, a sharp sell-off. You're going to get a sharp rebound. Does it have follow-through? That's what you want to see. And so what you need right now is for it to get above this swing high right here. What is this? $76.90. That's the first thing it's got to get above right now. Now, we can potentially get 5 off here, but there's also a potential ABC count. Depending on how you count this. So what you're watching is, first of all, it's topping out right here where it's already previously topped out, support resistance area here. But you need to see, does it get above that $76.90 mark? If it gets above that, then you need it to get above this mark up here. $114.83. If it can get above that, then I think you're good to go. I think until then, especially as long as it stays below this, this 76.90 area, I think it's still very susceptible to another sharp decline here. And so what happens with that? Well, it just means, again, that things aren't going like they were. The economy falls off the cliff. Nobody's taking flights or taking cruises. And so there's no demand for the oil again. And people are staying home and all this stuff going down. And I think that's how you get the prices back down there again. Now, if it's going to or not, I don't know. We'll see. But for right now, until we get above at least the 76.90, but really the 114.90, I think it's a very real scary kind of possibility with it. And so that's what I mean. But when I say that, I'm talking about locally here first. Again, right now we're just going to look for for a pullback into the 40s, maybe the 30s. If we drop down below this swing low, then things get kind of interesting. This 33.64. Let me see here. Yeah, $33.64. If we get below that, things start getting interesting. But as long as we're above that weekly pivot, we're good. We lose that weekly pivot, and all of a sudden you want to start looking at the EQ here of this demand structure, which is basically almost your S1 pivot here. $10 or $15, negative $10 or $15. So that's what we're going to be looking there. Let me see here. Brian Riley says his favorite part about crypto Twitter is bull shaming. You didn't buy enough. I know. By the way, guys, you also notice I'll never say that. I'll never tell you you're an idiot or you have a small brain if you don't buy. I think that is the most disrespectful thing anybody can do to anybody. Most of people on crypto Twitter are like you guys. You're newer traders. And I think just talking to you like that is absolutely just stupid. It's disrespectful to the greatest extent. And you'll notice it's a lot of the larger accounts that do it. Man, I don't have a lot of respect for people that treat people like that. If you're a new trader, man, you're just trying to figure it out. And I get that. It's just really frustrating for me for that people would talk, because I spend all my time here trying to help you understand what's going on. And you got people out there who are like, oh, you're an idiot if you don't buy. It's a waste of space. Let's see here. The one bullish thing is that this dip was fueled by over-leveraged longs covering, but now we're seeing funding rates, OI reset, and spot buying returns. Yeah, that's definitely a possibility. I think you're talking about Bitcoin there, right? Yeah, that's definitely a possibility. Like I said, I'm more bullish toward one more move up than, the top being in just yet. But things definitely get interesting if it does pull back, lower lows there. But even that doesn't mean it's done. It means it could just be completing that wave 4 still. But it could, a lot of people might get, caught in that because they've been told to buy the dip, buy the dip, buy the dip. Sadly, a lot of them are going to buy it on leverage. I put this in the wrong one. Let me get back to my Bitcoin chart here. DeFi perps in there. Let's see here. Oh, come on. There we go. Yeah, so, it just could be like a larger wave 4. Again, this could be an A here as a leading diagonal. And then you get a B here, and then you get a C down toward those mid or lower 30s. And it would just be a bigger dip. The problem is people are told to buy the dip. Two things happen. One is they buy on leverage, so they get caught, they get liquidated, or they close out their positions at a loss when they could have, potentially got some profit. The second thing is they buy, but then they get scared when it starts falling down, and they're scared that they're going to, that this is the top and it's going to be 2018 all over again. And so then they sell at a loss. Again, guys, you just have to understand if you're buying the dip, what you're actually doing with that. If you're buying the dip, you've still got to know when you're potentially going to get out. You don't ever want to make those decisions emotionally, in the middle of a trade. You want to know what your plan is before you do that buying. And so we talk about that a lot, of course. Again, guys, if it sounds cheesy, but if you're failing to plan, then you're planning to fail when you trade. Let me see here. Let me see here. Sam. Oh, Sam doesn't like me. Chris, you're one of the biggest bears in YouTube. Hope you didn't lose much money when the money printer went burr since last March. Well, I'm sorry, Sam, but you clearly haven't been following. Hey, but you know what? So, Sam, really, if you want to join us at howtotradetowin.com, if you had joined us back in March, you could have made absolutely stupid money with us. We've had like I said, I had one of our, I think I mentioned last time, we had one of our members send me a spreadsheet and made something like over 400 trades. I'd put in 400 setups since they joined earlier this year. Our stocks have just been significantly, our stock trades have just been absolute killers, just doing absolutely great. But because I have you have to understand, man, the macro ideas don't mean things happen overnight. Again, we're talking, you remember when I go to the DJI, the Dow Jones here, we're talking about a 90-year cycle here. It's not going to happen overnight. It takes a little bit for price action to settle in, for all that final exuberance to get out. I've been talking about the asset inflation via QE most of the year. So I have to assume that you're either not really, that you haven't been checking in regularly, or that you're really just not paying attention. And I don't mean that to be disrespectful. I mean that to be honest. Because I've been pretty clear about what I've been saying. And explaining, especially the last few months, 4 months maybe, really explaining what QE is and how it affects things. You talk about the money printer, but, it's not what you think it is. I do have, if you want to follow me on Twitter, I don't know if you follow me on Twitter, TX West Capital. Follow me on there and search, do a search for QE. I actually posted a tweet a few months back with 5 or 6 different links trying to explain what's actually happening with QE and why it's not what you think it is in terms of money printer. All right? But just based on that, I'm pretty sure, it seems like that you think it's money entering the economy, and it's not in the way you think. It's really, in terms of QE, it's really just a boon for primary dealers, and then they take that money and they go and buy treasuries with it, really. And so it just becomes nothing more than a balance sheet notation, a balance sheet move. It's not that all that money is just freely moving throughout the economy. And I know that's a little bit difficult to understand, but I think it's imperative. If you're running around screaming money printers going burr and you think inflation's on the rise because of that, really it means that you don't understand what's going on with QE and how it really works. Most of the money, that's only part of the money. Most of the money actually sits in the Fed Reserve for the banks to use as collateral on their loans that they put out. So if the money creation comes when you or I or some company goes to the bank and we take out loans, that's where the money creation actually happens. And then when we pay it off, that's the dollar destruction. It's destroying dollars. So that has a deflationary effect. Taking out loans has an inflationary effect. So yeah, that's really the way it is. Let me see here. JP, thank you. I appreciate that, man. I'm Deuce says macro is way more interesting. Hey, man, I love it. I'm glad you think that way. Most people, again, it's always been joked that, economics is the dismal science. Nobody likes to do it. I enjoy it quite a bit, though, myself. Hey there, Moran. Good to see you. Teo, what's going on? Let me kind of hear. Meta, what's going on? I see you checking in there. Let me kind of catch up with you. Stinkbid, what's up, man? He says there will be a cycle top, and I agree with 5 waves down, but you don't think it'll fall to the doomsday downside levels because my chart doesn't account for inflation over the past 100 years. Oh, are you talking about with the Dow Jones? Here? I mean, if we're just looking at structure here, we should expect a move down toward, at least toward these March 2009 lows. In this area anyway. We should at least expect, even if you don't think it's going to be a big cycle top, again, a grand cycle, there's, 1, 2, 3, 4, 5 here. So even if you don't think it's going to come down, lower than that, you should still expect it if there's going to be some kind of pullback. It should still come down to this areas here. Back here during this, this was just a correctionary period. You guys can look here. Here's the dot-com bubble. Boom, there's the crash. Here's the great financial crisis. Crash, gives you a spring, moves up. So it should at least come back down to this area at least. If you're losing this swing low, though, here, yeah, big, large, correction coming in. Here's the thing. I don't want it to happen the way I'm thinking about it. But again, if we're looking at it, that's very much the possibility. So it just pays to be prepared. I mean, even if it's just going to get down over to this area, that's still a significant drop from, 30 down to 10 or 11, right? That's still a significant drop, right? A lot of people are going to get hurt doing that. And maybe for me, because, I'm older, I'm in my late 40s now, mid 40s maybe. How old am I? 47, 46? Wait, what's 2021? 46. I had to think about that. But, for people in my age group, mid to late 40s, 50s, 60s kind of thing, and then later, this right here is significant. Because I think even if you get just a move down here toward the 10, 11,000 area, it's going to take years before you get anywhere back up here to 31,000. And so in terms of retirement and stuff that most people are looking at, they're going to get hurt a lot on that. If they don't prepare for it, for that potential drop that happens. Because the last thing you want to do is be holding up there and come down here and then go up. I mean, next thing you look, maybe 5 or 10 years, 10 years probably, depending on how low this goes, before you're back up here. Now, again, what I'm talking about, the potentiality for something much more significant, again, very real. The idea that, super cycle here. Again, you've got a 1, 2, 3, 4, 5 here. I mean, maybe, right? And so you get that move back. You could have a pretty significant pullback. And that would take, man, I even think, I don't know, I'm thinking even if you're getting here to 10 or 11,000, I think you're still you're not looking at an instant back up. I think you're looking at, some time to get back up there. Because that's gonna unwind a lot. You got to think of this in terms of credit. We're looking at potentially a credit bubble top kind of thing. And so a credit bubble is the everything bubble because everything's on credit, right? So that big drop there would be quite significant. It would take time for it to unwind and for people to get okay and get going again, I think. You're glad you're not the only one who forgets their age, Crypto Mowgli? So yeah, I mean, stink bid. Hopefully it doesn't. But, again, it's better prepared and understand the possibilities than to just, blindly kind of close your eyes and just say, oh yeah, it's going to keep going up. That's not a problem. Or it's just going to pull back a little bit and then it'll be back up. You definitely don't want to do that. Because again, you don't want to be, God, man, you guys don't want to be working at Walmart greeting people at 75 years old, right? Want to enjoy your retirement. You worked hard all your lives, right? I hope you have. You want to kind of enjoy those retirement years. Get to do the things that maybe you've put off doing until you retired. So, that's my whole thought with that. Let's see here. Mark says, as someone who works in pension and group retirement plans, what can be done on the pullback to 10 or 11 if it were to occur? Something, it's a possibility, not guaranteed. Yeah, exactly. Man, I'm not a financial planner or financial, registered financial analyst or anything like that. The best things that you look for here are some thoughts, guys. Generally, if the market's pulling back is a recession or a depression or something, if you still want to look for something where you may get some growth during that time, you're going to want to look at things that people need anyway. So you're going to look at defensive stocks. You're going to look at things like, what's it called? Consumer staples, food, medical, things in medical. Those would be the big things, I think, as far as maybe some stock plays. But at first, if there's going to be some kind of drop, even if it's just recessionary rather than depressionary, at first everything's going to take a hit. So often, your investment grade treasuries, those things are usually a better place to put it. Something that protects your money, while things are dropping. And then when you look to get back in, you'd look, consumer stuff like that. I think there's a possibility, because we're so far into this whole information age and technology and whatever, that, when you're buying other things, maybe in addition to those things that we normally look at, maybe you're looking at things like Amazon, maybe Walmart. Walmart's got a lot of their online stuff now. I use Amazon quite extensively. But I've recently really kind of started getting into Walmart a bit more, as well as, because they've got their delivery, just kind of checking it out, seeing if it's worth, if it's something that'll really work for them. I'm just, guys, when it comes to technology stuff, I think you really have to try it out yourself a lot of times, especially when it's something like this home delivery and stuff like that, to really see if it's worth a play in that particular stock. I know locally here as well, you can have, HEB, I think, does delivery as well now, and stuff like that. And if these things are handled well, then I think it really does good things for the company, for the stock price potentially. But it's so easy to mess up. And if you do, I think it's really hard to recover from that and continue on with it. So, if you're looking for plays, for technology plays for stuff like that, Amazon, home delivery stuff, Grubhub, all those kind of things. And, I'm really not even sure how well something like Grubhub or, whatever those other ones will do if we were to have that kind of thing. Because, those cost extra money. And I don't think you have that kind of disposable income. Most people, big enough when that happens. Ride sharing, that'll probably drop off. Uber, stuff like that. Airbnbs, of course, will drop off like they did during the pandemic. Not just because nobody's gone, but because nobody's gone because they won't have the money if the economy's kind of going off. The idea that the economy's dropping off means companies are going out of business, means people are losing their jobs, stuff like that. So not a lot of free money going out there. People talk about the stimulus. If we get here in the U.S., I think they're trying to right now get it through Senate, $1,400. If you qualify, if your income's low enough to qualify for that. Which is actually not really low. I think it's I think that might be part of the thing they might do. I think it's around 70,000 right now. The Senate might change that lower, 60,000 or something for single. And then of course, a bit higher for married. But I think most people with that kind of money, if the economy continues doing what it's doing here, remember, we know that the stock market is detached from what's going on everywhere else, right? And so I think most people aren't like y'all. They aren't in the markets like this. And so they're going to either pay off debt or save their money. In either case, it's not inflationary for the dollar, because it's not being spent and reused throughout, throughout the economy. It's not enough just to print, but it has to be then used and used again and again. So if people are getting money and then paying off debt, that's what I was talking about earlier. That's deflationary. That offsets the effect of the direct payment easily. And it brings down that credit. If they get it and they just stick it in the bank to save, again, same general effect. It doesn't actually destroy those dollars, but those dollars are sitting not used. So they're not out there circulating and whatnot. So your inflation effect doesn't happen like you're thinking. Mark, you're welcome, man. He said, I read recently that inflation may be dead as the advances in technology and the cost cutting associated with its adoption will be enough to offset previous inflation points. Yeah, that's an interesting concept as well. There was somebody who wrote a short book on that, I think. I'm going to have to go through my library when I unpack everything and find that book. The idea that the deflationary effect of technology. And I think that's an interesting idea. Sure. We'll have to see how it all plays out, of course. But remember, when we look at these grand macro ideas, It's still always, nobody knows for sure. I talk about what I talk about. The Fed talks about what they talk about. Other people talk about what they talk about. Nobody knows for sure what's going to happen. Nobody can guarantee you that anything that we're seeing or viewing it that way is going to be what it's going to be. Again, not even the Fed. As I gave you that example earlier under Bernanke, the policy they were following, what they thought would happen, didn't actually happen when it came down to it. So, we do the best we can with what we have, and we just pay attention. We're smart. We don't just jump in and out, bullishly or bearishly or whatever. We kind of trade along with it. So, having a bigger macro view doesn't have to affect your local trading. Just because I look at something here as a 90-year cycle doesn't mean it's something that might happen tomorrow. Now, I thought it would have happened a little bit earlier already. Sure, I was wrong on that. But I'm not surprised that it didn't, if you guys can understand that. Because again, we're talking about 90 years of buildup here. And especially the credit expansion since the 70s, since we went off the gold standard. Whoops, 87 right there. But the 70s here, since we went off the gold standard, Bretton Woods and all that, and the growth of credit since then and how far it's grown. So there's been that big, huge thing. So it takes a while. Remember, when you're talking about these this large cycle here, you're talking about cleansing what's happened over the last 90 years. These smaller areas, you're talking about cleansed what's happened just prior to it, just since the last one. But this is the bigger one, so it's about the total cleanse since then. So we kind of look there. So yeah. I'm sorry, White R21. If it was a credit bubble, would it make sense to own credit-free assets like commodities? Yes, Bitcoin and certain debt-free stocks. Well, yeah. And so what it means is, I think what's happening here when I talk to people more and more, I think what they think I'm saying is that Bitcoin's dead or it'll be dead. No, not at all. What happens at these cycles, at these tops, is in this area, everything drops at first. But before the market finds a bottom here, the stock market, usually your commodities and whatnot will find a bottom first. So everything takes a hit at first, and it all drops for a bit. But then your commodities, then when, as it's gone down a bit there, then people start rotating, start putting some money into your commodities and whatnot. And they'll start heading up prior to your stock market finding a bottom there. And so they'll go up before it. Yeah, so I mean, that's all I would expect. I don't expect that, that any kind of, even if we have a depression coming in, that's going to kill, excuse me, hiccups here, that it's going to kill, precious metals, or it's going to kill Bitcoin or anything like that. Bitcoin, here's the thing, guys. I'm going to leave you with this. I'm about to go. But Bitcoin, you have to remember, Bitcoin has never been in an economic downturn. Remember, Bitcoin started, there in 2009, 2010, there after the stock market had bottomed, right? So it's been in this bull market, this legacy bull market since. So nobody knows how it's really going to react overall if we were to have some large recession or even a depression. But what we do know is, if something like that happens, everything goes down at first. We know that. Historically, everything goes down. And if you just want to say, oh, it's different this time, man, good luck to you. I would never take that bet. You want, if you're trading, guys, it pays to be contrary when it pays to be contrary. But it doesn't pay to be contrary just to be contrary. Okay? I get a lot of people who say, oh, I'm a contrarian trader. And what they mean is they just want to take the opposite side all the time. That isn't how it works. You got to look for the reasoning behind it. Is there a reason to be contrary? And when it comes to something that has happened continually through the lifetime of the market, the last thing you want to do is be contrary to that. To be contrarian. You want to, until it gives you a reason to do so. So you assume that Bitcoin's going to go down like everything. Now, if you're a long-term hold, no matter what, guys, and you've got a long-term outlook, if you're in your 20s and you've got 30 or 40 years, fine. That's fine. You can buy Bitcoin right here, spot, and wait it out. That's fine. That's usually what we talk about with stocks. But if you're in your 40s or your 50s or something like that, and we've got some large kind of decline that may take a few years to get down, and then 5-10 years to get back up to those highs it was at, well, all of a sudden that's not good for you. It doesn't pay to just buy that $40,000 or $50,000 Bitcoin. And that's what we talk about. Everybody's different. Everybody's in a different position in life and wealth and finance positions and goals and all this stuff. So you have to really kind of do the work that many traders don't do when they first come in and find out who you are as a trader or investor. Here's what you need to do. Figure out be honest with yourself. Don't lie. What is your current financial situation? What are your short, mid, and long-term financial goals? That's your income, okay? What is your current wealth position? What are your short, mid, and long-term wealth goals? Be very honest with yourself. Take some time to do this. Don't rush through it. From that point, then you need to figure out, okay, how risk adverse or risk tolerant are you really? Not what you want to be. How, in life in general, how tolerant or adverse to risk are you? Because this is a very important part of trading. Because if you are really risk adverse, honestly, but you try to pretend that you're not, you try to lie to yourself that you're not, then in your trading, it's gonna cause you to have a lot of problems. It's not wrong to be more risk adverse or risk tolerant. You just have to be honest with yourself about which one you are. So that way you can develop your trading plan that works for you. So you do all these things. So the next thing to then figure out is, how much time do you have to trade in a day? Be honest with yourself. If you're working another job, you might only have a couple hours a day to trade. Be honest with yourself. Don't say, oh, I've got 10 hours a day I can trade if you've only got 2. Because that's going to help you then understand how long a time frame you should be trading. You can't have only 2 hours a day to trade and think you're going to be, a day trader. You have to look at your, longer term trades. And finally, in regards to how many hours a day you have, how many hours a day do you want to trade? You may have 10 hours a day to trade, but you may really only want to trade 4 hours a day. You guys honestly need to sit down with these things and figure out these answers, because they will help you define who you are as a trader or investor. And once that is defined, you can then look for options on the right time frames. You won't be trying to trade 15-minute time frames if you should be trading 4-hour time frames. And the reverse there. And all that's going to do, that's all going to help you become a better trader, to have more successful trading in general. Because all of a sudden, you've got a plan. You understand where you're starting at, where you're at, and where you're going. If you're doing anything other than what I just said you need to do, you guys are likely going to be losing a lot more money than you are making it, because you're just throwing stuff around. You have no real plan. It's like when you think about your career, you're out there working, you have a plan, right? So let's say you're in technology, right? And maybe you're maybe you're tech support, right? Or maybe just answering phones, real basic level, right? But you want to advance. So how do you advance? Well, do I want to be a programmer? Do I want to be in IT security? Do I want to be in data analytics, information stuff? What do I want to do? So you have to decide where you want to be. And then you have to say, okay, now how do I get there? And you have to make this plan to get there, right? You can't just kind of sit in there and just kind of just do your thing and expect that it's going to come to you, right? You got to be proactive. Same way with your trading. And so that's one of the really important things that most people don't really get. And those things will also help you with your risk management as well. It'll keep you from, hopefully keep you from trading timeframes that you shouldn't, which reduces your losses a bit. And of course, you still have to work on your risk management. So really, just some thoughts on there, guys. All right. Let me see here. When you trade on Prime XBT, I put money on you in the mirror trading. Oh, yeah. I can't do a lot of those because I'm a U.S. Resident citizen. I can't do a lot of the most of the copy trading out there. There's certain laws here in the U.S. regarding copy trading. and platforms that provide that opportunity, that kind of thing. So yeah. But also remember, guys, all those things I talked about what makes you an investor or a trader that you are, I've gone through those same things myself to find out who I am. And so part of the reason why I don't tell you guys, listen, you need to buy now, or you need to sell now, is because these things that make me who I am as a trader and investor are not the same things that are going to make you guys who you are. And so even if I, for me, it makes sense to sell at a certain area. And if you sold there, you might make a few bucks, but it may not be the best trade for you. You may have been able to make a better trade, more, that's more conducive to who you are as a trader investor. And that's the important thing to understand. I know as new traders, you often want to go out there, you just want people to tell you where to buy and sell. But I'm going to promise you right now, that is the quickest way to lose money in general. Go through do the hard stuff, guys. Learn to trade. It's going to be so much more rewarding, and it's going to, in the end of the day, it's going to cost you a lot less money. Even if you can make a little bit of money consistently with somebody, what happens when they're not there? Look what happened to me here not too long ago. I had 4 days without power, right? And so, what do you do in times like that? How do you buy and sell if you're relying on somebody else to tell you to buy and sell certain places? And so this is really the importance and the way of which that we do what we do, guys, at TWC. It really is about getting you guys to understand trading and to understand the markets and to understand yourself so that you can be as profitable as possible. So anyway, there you go, guys. I need to get out of here. God, it's over after 1 here. Thanks a lot for joining me as always, guys. I really hope you guys have an amazing day. Like I said, we would love to welcome you in at howtotradeTowin.com. When you sign up there, guys, it's all automated now with the Discord access. It might take, it should happen pretty quickly when you register, when you join, when you pay. But it may take up to an hour to get your access cycled through the system. So just give it about an hour if it doesn't happen right away. If it's been an hour, please contact me or Adam there on the server, and we'll get you taken care of as soon as we see your message. We'll figure out what's going on there. But it seems to be working real well now and getting in there. We'd love to have you there. But other than that, guys, we'll be back on Friday at 11 a.m. Central Standard Time to talk some more about the markets and see where things are headed. We'll see how this week goes. I don't know. Stocks aren't feeling especially bullish at the moment. The dollar really kind of just doing its thing there last few days. So we'll kind of see how this plays out through the rest of the week to get maybe a better feel on things. So until then, just trade safe. And remember, the only thing that you control in the market is how much you lose, guys. That's it, all right? So I know it's boring. I know it's the thing that nobody really wants to do. But the absolute most important thing you should do day in and day out is continue to perfect your risk management. Risk management is where you make your money, period. If you can figure that out and get that understood, really kind of accept that, you guys are going to be on the way to making a lot more money than what you have. Or at least losing a lot less money. All right? You guys have a great day. Thanks a lot. And if you're in Discord, of course, we'll see you guys over there in just a bit. Take care.